we mentioned it before that when, well, early 2020, when the first COVID case came to Jamaica, the overall market probably fell at least 30%. So a lot of stocks were down. How did you navigate that for your portfolio?
All right. So COVID, guys, I must tell you, I was lucky. Let me tell you why. Let me tell you why. So nobody could have predicted when the first case would have been in Jamaica. The first case I think ended up being about March 10th or 11th or something around that.
Yeah.
Whereas one of the first publicized cases globally was in December. Um, that's a pretty rapid spread globally. For me in 2020, early 2020, I was preparing to make a purchase on a property. I
Oh.
didn't want to do a margin at that point. And as such, and boy, I built up on investments for a while, and I kind of had to convince myself that this is why you invest. So I wasn't even thinking about COVID necessarily affecting the portfolio because this was probably in earlier January, right? Where it was just something that you were hearing on the news. It wasn't real as yet. If you understand what I'm
Yeah.
saying.
Mm-hmm.
So I actually started to sell down my portfolio
Mm,
from January.
nice.
So by time it touched March and the first case come and that week the market dipped. And I believe over probably a week or two the market dipped probably around 20%.
Mm-hmm.
I was considering myself lucky. Like this wasn't any foresight or anything
Mm,
because that means that I would have sold at highs.
yeah.
So I would have gotten the best possible price
Wow.
that for
Time in the
most of
market.
that year. Yeah,
Mm-hmm.
yeah, but I never time it at all. I never time. So I was very good, and probably if I had sold at those much lower prices, I couldn't have done what I did that year in purchasing. Having the funds to put forward to buy and renovate my first property, right? So I mean I give thanks for that. Over the what I would say over the rest of the time period though. So as I told you at the first part, it was luck. I'm gonna say it. It was just luck. Over the remainder of COVID though, as I continue to invest, because of course you stay invested. So even though I would have pulled out funds to do something else, I was still investing
Mm-hmm.
periodically on the market. It was really pointing your funds in the direction that you think or the industries that you think would support what the new world would be under COVID. Now, to contextualize, it seems straightforward now, but almost nobody in March 2020 thought that there was a possibility that the government would put every single person in Jamaica under quarantine, meaning that there would be. So I at that point I lived in Bulbi, and I remember Bulbi was the first case, was right outside Harborview in Bulbi for a British lady that went to a church,
Mm-hmm.
and that was the first quarantine area, and I was in it. And it was like
Yes.
soldiers and like quarantine at the serious something. Like
Mm-hmm.
soldiers, they line off the entire road and thing, and you really, really, really could come out of where you were and thing.
We were
And
there for like days. It was like
yeah,
good
man.
amount of
Yeah,
days you
it
guys
was
were
a
under
it was a
quarantine
little
though.
while, and everybody else in Jamaica did a laugh after the people in my Bulby.
Yes, definitely.
Because
And a Bridget
yeah,
that
man,
was
I
in
remember.
Bulgaria told us he was struggling at home. Instead of soldiers them passing every day. Yeah, man. The pro.
Yeah, man. I remember. So to contextualize it, while in 2021, 2022, everybody started to catch their feet and say, okay, this is the reality, work from home, quarantine, etc., etc. In 2020, at the start of that, nobody really knew where we were going to be. There was a significant level of uncertainty, and there was a significant level of uncertainty in the market. So, matter of fact, a lot of investors pull their investments on the market, which of course ended up pulling down the market
Mm-hmm.
even more. I think,
Mm-hmm.
Mm-hmm.
and of course, tourism was quite literally on a couple months before. I don't think you could tell anyone that the tourism industry would go to almost zero. Like,
Yeah.
remember, most, if not all, hotels were just closed, were
It's
Yeah.
gonna be
closed
it
because
was
of that.
gonna be our best year yet. I think
Yeah, and it
the
was, we were on track to have
First,
a
that first
record year for
quarter.
2020. Yeah, because
Mm-hmm.
2020, 2019 was very good. So
Mm-hmm.
I think what the more savvy investors started to do is realize that, okay, in this point of uncertainty, food is important, right?
Yeah.
So food is important. So when you look at stocks, not just locally but internationally as well, that operate in what we call consumer staples, things that people must get,
mm-hmm.
medical related companies, so companies that provide, you know, for this is internationally, oxygen, masks, things like that.
Medication,
Locally,
stuff like
companies,
that. Yeah.
Yeah, I remember
yeah,
we used
man.
to have some serious mask shortages. You couldn't get a
Mm-hmm.
mask, and they would always sell
Yeah,
out
man,
initially.
serious. Can't remember, when you before all of this, the only people that were using masks was really the people that needed to use masks. Matter of fact, I'm looking on the charts,
Mm-hmm.
for 2020 now, and if you look even at a Grace Kennedy, um,
Mm-hmm.
in 2020, Grace Kennedy, at the start of that, peaked on January the 1st at $74, right?
Mm-hmm.
Dipped throughout that period. I think while we were first quarantine early summer, and it dipped to about 50 something dollars in September. But as people started to, kind of adjust, so it was kind of a period where everybody was,
Yeah.
where are we exactly? Yeah, a lot of uncertainty as people started to adjust. Grace Kennedy, which, as you know, was a large food base. So I'm using this as a very loose proxy. Move from like 56
Mm-hmm.
back to, over $100
Mm-hmm.
Mm-hmm.
early in early 2021.
Meal pack was a really
So
nice one too, because the
yeah,
logistics.
yeah,
So that was
man, yeah,
a really
man,
nice. Yeah, man. Diana and I, meal pack was a nice
yeah,
way of
man,
buying.
meal
And
pack.
got both GK and Mailpack. Like
Yeah,
Yeah.
man,
GK
meal
did
pack did well.
Mailpack did pretty well
And
as
then
well.
the funny part too is um looking back, kind of okay. This is kind of tied into our my initial point earlier about the 20-year goal.
Yeah. Hmm.
At something like Mailpack. Mailpack today, we're recording. It's end of February.
Mm-hmm.
Mailpack today is at 196. Mailpack. Imagine if someone was picking. Okay, I'm gonna the 20-year goal. Say it's 1,000%, but I'm gonna split it up into 1 year. I put my money in Mailpack. My goal this year is to make 100%, or say it's 50%. You put the money in Mailpack, because you saw that okay, you're gonna need logistics and stuff like that, like ship. Like there was a point where you like the same things. You couldn't leave your house, like you. So if you needed something, if you're not allowed to leave your house, then you're gonna have to use shipping and stuff like that. So people were Mailpack was obviously benefiting from that. You
Hmm.
go up, you buy it at the $2, it shoots up. It's at $4. You've already reached your goal. But your goal was 50%. It has now gone up 100%. You sell the stock, you sell all your units, and then look at this. Um, Now you sold it at $4. You bought it at two, sold it at four, and now you can buy it back at that same price.
With double the
Multiple
money.
years ago with double the money,
Mm-hmm.
and so like something like that. If your end goal is to get the 1,000%, um, it can be a better way to do things like that, because you could even go back to Mailpack and say, oh, I know at some point Mailpack is say gonna be the largest shipping or logistics company in the Caribbean. Maybe they're gonna do a lot of mergers and acquisitions, and that's your okay. And remember, they also pay
Hmm.
out really strong dividends. So if your goal is, for
Hmm.
example, to have dividend income of a certain amount per month, and or you want a certain yield, you might see Mailpack as that possible stock to get that goal. But at times like that, that would be an important thing to look for. So if your goal is to say get a certain amount of Mailpack units, selling at that price helped you to get more of those units to help you get your goal. Now you could have buying back in little like that. That's why when people say things like you can't time the market, I look at examples like that and I'm like, if I could sell all my units at that price, a high price, and I think that there's gonna be a point where it's going to drop significantly, I could buy back in. Why wouldn't I? It just makes investment sense, or it just makes sense to me, I guess.
Mm-hmm. And even with that timing the market point, that's even something like that. Imagine if we had shorting, right? People time the market as well, whether you're buying or selling, because if you expect the stock to go down, right?
Mhm.
That's you still timing that, okay, at this point in time, I probably expect bad news because this is when the company does this with their taxes and so on. It might eat out. Or let's say a company hasn't gotten revenues in a long time. And you said, okay, e-sales are probably going
Mhm.
to hit them or something that you expect the company to make a loss, right? And that can drive the price down. So you short
Mhm.
it. I mean,
Or
it's,
like things like Palace, knowing imagine if well, I don't think you would be able to short Palace, but um imagine being able to short Palace when those first COVID cases hit, and then
mm-hmm,
they literally could not do um the movie theater. They didn't really have any way to really be making money. I guess at some point they started doing like the drive-in theater, but there was a point where they just couldn't host any movies at all.
mm-hmm.
And then you
And
could
that was
benefit
just
from
law.
possibly shorting that because you're like,
Yeah.
yeah.
Yeah,
Yep.
yeah, yeah, yeah. Yeah, I can't disagree with the logic. There, I guess, as I said, the only thing that I'd add is there are other factors that may limit the amount of time that people can spend on that. Which is why some people should just really do managed funds. So a
Agreed.
pooled fund or a managed fund is not for everybody, but there are
Mhm.
some people that it is more suited for. And
Mhm.
I always say that you know probably got on the bash for it in the past that not everybody should even be invested directly in equities,
Mhm.
because different people have different risk willingness and abilities to take on risks. So there are people, for example, that are more suited to be in the safest forms of investments because they get severe anxiety when they lose a dollar. And you don't want to be their advisor because they're going to call you every single day. And it's not that they're not educated about it. They're just how their value on one unit of loss is more than the single unit of loss compared to what I value that last unit and you value that last unit. And I've spoken to people like that. And of
Yeah.
course, there are safe investments like bonds and safer, relatively
Safer
safer
investment.
investments.
Yeah.
Like bonds, repurchase agreements, or fixed deposit accounts for them.
Mhm.
Mm-hmm.
Interesting point about the bonds. What do you think of the
The
trend that
Mayberry
they're gonna
bond.
name? Yeah, because that's I think
Yeah.
pretty interesting because it's our first. Well, it's a publicly tradable bond where it's to list. I've heard different dates. Some people say when it was supposed to be last week, Wednesday, then they said, or Tuesday, then they said Thursday, then they said Friday, and it keeps getting pushed back.
I think they're probably. I'd probably say, and I mean, the intelligence that I have is that it'll probably be sometime in the next 2 weeks.
Mm-hmm.
Not at the fault of Mayberry. But I mean, generally speaking, while we have had publicly traded fixed income instruments before, like preference shares, etc.
Mm-hmm.
It would be good. It will be good to see how bonds trade um,
Mm-hmm.
publicly. That's what I'll say. So it will
Mm-hmm.
be good to see how it trades. Now bonds are different from stocks, right? Stocks do not accrue interest,
Interest.
right?
Okay.
Bonds accrue interest. So when you're purchasing a bond, the expectation here is that you're purchasing at a dirty price. So we'll call it the dirty price. Dirty, so it's not a bad thing.
Yeah.
You're purchasing not just the principal for the bond, for that given amount of units, but you're purchasing the interest that that amount of units that you're buying has accrued over that period of time from somebody else as well. So I'd like to see how that is accounted for on the stock exchange. Because currently the J trader just does not do that. It doesn't need to do that. When a
Mm-hmm.
dividend is being paid, it's paid on a specific day for a specific amount of units for with a specific cents or whatever dollars per
Mm-hmm.
unit. It's straightforward. So a bond isn't that straightforward. So I'm actually looking to see not necessarily whether the bond does well or not. I want it to do well. I want I want the market to develop more depth. I'm not against any security, but I'm actually
Mm-hmm.
more interested to see how it actually trades, the operations behind it,
Mm-hmm.
on the stock exchange, etc. So
Mm-hmm.
that's what I'm looking for.
Yeah, 'cause I think in the prospectus, that was something that I wasn't sure about, but when I had read the prospectus, they explained that, oh, if so, I thought I was imagining that it could work with like with a dividend where you have a record date and you have a X date, you have to buy before the X date, and then I was like, suppose I just bought it right before, that wouldn't to me it would be kind of
it
weird,
it
but then
accrues it
yeah,
accrues interest every single day. So
yeah,
once you buy it today, and assuming it accrues interest up to the day before,
mm-hmm,
so the price that you end up paying is going to be different on the day that that is done. But of course, bond trading is not new. So I
mm-hmm,
suspect that the FSC and the JSC having approved this, would
yeah,
have looked at the systems that they
back
have
end and all of that
internally.
stuff,
Yeah,
yeah.
man, I would have sorted all of that out. So I'm
Mm-hmm.
just interested to see how that happens as an
And
investment banker myself.
and I think it's going to be really nice too because you're giving in this, I guess, high inflation time, you're giving people a way that's, or you're giving like the same thing you're pointing out with a bond. A bond is typically less risky than a stock or viewed less risky than a stock. You're giving a lot of people this opportunity to own this thing that is pretty low risk, but the returns aren't necessarily as bad as what we usually see. I remember there was a social media post I saw from a financial institution, and they were bigging up or maybe 1% or 2% or something like that. Like they were broadcast and say, "Oh, you can get 2% on this investment thing," and that was a big deal. And then what they made the bond, it's at least 10% or so. I don't know. I guess
The
half
highest
the fee
tranche, I
have to
think
go.
it's is 12%.
12%.
Mhm.
Yeah.
Yeah. So I think that's also going to be interesting too, especially because um the marketing and stuff like that. I thought that they were even trying to pull in some retail investors and stuff like that. So it's not just institutions and stuff. They're trying to show people that you can put in your money this. It's a lot less risky than, or it might be viewed a lot less risky
But
than a
but
stock.
but
But
but, but the thing with a bond is, um a publicly listed bond is
Mhm,
traded on price as well. So it will go up
mhm,
and down. So the lower
exactly.
that price goes, it affects your, let's call it,
Mm,
an effective yield. So the coupon might be 12, but
mhm.
the yield that you get if the price goes down and
It's
you
up.
decide to sell at a lower price is going to be less than 12%.
Mm-hmm.
So I mean that's why I'm saying it would be interesting to see that. I don't suspect, not even suspect, but I think that most people aren't exposed to bond trading. And that's just common sense, right? Most people
All
just
right. Yeah.
don't trade
Most of
bonds
them are
because a lot of
conservative.
bonds have minimums of like 1,000 US or 100,000 US, and so it's something that's usually done by institutions or very high net worth individuals. So it will be good to see how that is traded by, let's call it retail investors.
Mm-hmm.
So I'm looking forward to the to that in the market for sure.
Yeah, me
Yeah.
too.
Mm-hmm.
Me too.
Hopefully it comes to market soon.
Yeah. Because we just keep seeing delays. But yeah, I hope it does. Any predictions, Simon or Matthew?
Or
On
in terms of
price.
price.
Yes. On
I
price.
mean, I haven't thought about it many much. I mean, sorry, I haven't thought about it much. I think for me, as I said, my interest is less on whether it does badly
Or the
or it does
performance.
great in terms of price, but to actually see how it functions.
Mm-hmm.
All of those things that we spoke about, the accrued interest and all. They got their full allocation. I think based on the last thing I saw, they got their full allocation. My understanding, if we apply equity type allocations to this, when
Mm-hmm.
there is an over allocation, meaning that when there is or it depends on how you look on it on under allocation, so you get less than you want,
Mm-hmm. When it's
that means that
oversubscribed.
there is oversubscribed. Yes, that's the word I may look for. I say, I'm sorry, as I said, tired.
Yeah, man.
But when it's oversubscribed, that means that there is demand out there that has not
Mm-hmm.
yet taken up everything.
Mm-hmm.
Now, when it's subscribed just perfectly, it makes me wonder if that demand is still out there. So when it lists, and I'm just loosely applying how we as retail investors think about stocks.
Mm-hmm.
So if dollar comes to the market and they say they want to raise $400 million, and they raise $400 million exactly, for that amount and list the dollar shares, is there anybody out there that has demand to buy the dollar shares when it lists,
Mm-hmm.
assuming that everybody that wanted it already received everything that they received, right? So I think for that there may possibly be some downward pressure, but the marketing around the issue itself was very good. I
Mm-hmm.
know that Mayberry itself is relatively aggressive as it pertains to trading itself. So I know that they will have their plans, and they will have their clients, etc., and new clients, support them where needed and where suitable. So I'm
Mm-hmm.
I'm I'm not worried about the trading for Mr. Berry at all.
Mm-hmm.
Another thing is if it listed and it dropped, I didn't apply, but that to me that makes it better because imagine
And it
something
depends.
that.
To me, for me, it depends on the tranche as well because you have four different ones with different interest rates. So imagine the one that's oversubscribed, that 12% one dropping. That would look so attractive to a lot of people. So I'm very I would love to see how it actually performs. I think the
Mhm.
different ones would perform a bit differently, but
Mhm.
That's a
especially
good point.
yeah,
Yeah,
especially
that's a
seeing one
that's a, that's a good
oversubscribed
point.
from before the year even started. I think it was end of December that one oversubscribed. The
I
the
think it
first one.
oversubscribed, as in it closed off. Like they said,
They
we
close it,
got
yeah.
yeah, we got
They
all the
close it
money we
early.
needed.
Hmm.
Yeah.
So
That's a good point to read the 12% one. If the price drops and somebody buys it lower,
hmm
It's a
then
better
the
yield.
yield for them is higher.
Mm-hmm.
If they hold it to maturity, or if the
exactly.
price goes back up above where what we
Mm-hmm.
call par is.
Or
So of course it becomes much better for them.
The thing is to
Um,
imagine
mhm,
you making up, imagine it listing if it dips, say 20%, you can buy that and say it were, well, say it had listed early in January, so at the beginning of January. So you buying it now, you have that whole period of interest to accrue. And imagine getting the cap gains on that and then also getting that payment, which is more, and say you bought the 12% one and that it's no longer going to be 12% by the time you're buying it. So there's the added payment, when you're on record, and then there's the possibility of cap gains. That's pretty interesting to me.
Hmm. I'd love to also see how institutions treat this as well. Will I see a lot of
Hmm.
institutions buying it? Because I don't know. I don't know how institutions view stocks versus bonds, but if bonds are viewed safer in a lot of based on the financial institution and so on, if it's safer, I could see a lot of institutional support, and institutional support carries a lot of money, so that demand could be heavy. We'll see. Because I think a 12% to a bank, that to me sounds great. So
Hmm.
we'll see.
Yeah.
Mm.
Um, Something I would like to ask people. Could you give us maybe two stocks you like and maybe why?
For no, so I always try to I try to stay away from talking about stocks. I don't like when people. Well, I like it, but and
Hmm.
I am an advisor. But let me just
Mm.
say I'm not your advisor. So anybody
Yes, and this is not
that
financial
listen,
That
advice.
that's advice.
Not
yeah.
financial advice.
So
Speak
if
with your
you
licensed
want,
financial advisor, everybody. But we no pressure, Simon.
mm,
The thing is, it's everybody. A lot of people that come on the podcast, everybody that invests, we just like to ask this question. Doesn't matter whether it's in your
mm.
portfolio or not. Nobody has to know. You could just literally
Yeah,
just
I
like this
mean,
company and
I have stocks companies.
mm-hmm,
I've come clearly. I can't buy and I won't buy every stock that I like. Right? I will buy stocks that I'm more convicted. Um, will meet my goals within the time period.
mm-hmm,
That I've set. I think generally I I like Regency. I tell people that I'm a bit biased because having met Andrew, and probably a few members of his team, I like
Hmm.
them. I like how he speaks about his business. He's passionate about building his business in Jamaica, and I think where they are, and this is even in his own words. You can check this back out on our interview on Stocks on the Rocks.
Hmm.
Um, there is significant growth between even the financials that they would have presented in the prospectus to when they would have actually listed. I believe the gas station is now up and fully running, and they're looking to open, more. So I think Regency is one that I like. I can say a disclaimer there. That's one that I've invested in. Personally, I won't tell you how much.
well, that's
Um,
a
What's
say.
your average? You also your average price?
my average price is pretty good. I can't complain. I can't
Yeah.
complain at all.
Mm-hmm,
Um, I like, and the companies slash stocks that I like, thinking about it, they are a lot of times related to who the CEOs or the founders are, because the CEOs and the founders drive the culture of the business.
mm-hmm,
um, and I believe they form a critical part of not just where that company was and is, but where it will be.
mm-hmm,
So the next one, of course, is Dollar. And I've liked Dollar for a while. Kadeen is pretty aggressive. I've known Kadeen for years, and I remember trying to do some business from before, and this was when Dollar was very small. And Kadeen was taking myself and my boss around to the branches, and I could see that this youth is passionate about in business. And this was when Dollar was small.
mm-hmm.
It's nowhere near where it is now.
Yeah.
Very aggressive about getting loans out. He knew his clients. He knew whatever account. He knew when you missed a day. He spoke to people personally. Um,
Hmm.
and I liked that from then. So when I saw Dollar being listed, I was like, this is a no-brainer for me.
Mm-hmm,
And of course, because Kadeen himself and by extension the board are aggressive within the parameters that they've set. When they, for example, when their intentions were leaked for them to acquire Access Financial, I wasn't surprised that they had the audacity to even think about that. Seeing them expand in Guyana and looking to expand in other countries as well.
Mm-hmm.
Getting their microfinance. They're one of the first and larger companies to get their microfinance license from the BOJ. And
Mhm.
seeing the expansion over even since listing. I'm really looking forward to that. I believe that they have their earnings coming out pretty soon. Should be this week or next week. I don't remember exactly, but
Yeah.
March first,
definitely
I think.
definitely looking for.
Yeah,
Oh,
March
this
first.
weekend, this
Yeah.
week,
So
this
next
week.
week. Yeah. Or yeah,
Mm-hmm.
Yes,
Sunday.
I'm looking forward to that. So
Mhm.
those are just two that I like. I think the companies, as I said, that I like are related to the people. I like Apex as well. I think Keisha is an excellent manager. And you know, I mean, having spoken to her as well about her vision for Apex Radiology, and where she
Mm.
expects that to go. Of course, it's a company that I like as well. Yeah.
Mm. Yeah, I think the funny what you're saying about the whole dollar and access debate. At the time, people were, I think it was maybe I don't remember, was it Marcos that had said it that dollar isn't. I think someone maybe Cadino was saying they're the largest microfinance company. But then people are saying, oh, but look at Access, and then if you look at it, Access's loan book still well is a lot larger than dollar. But then when you're looking
Mhm.
at it in terms of like profitability, um, I noticed the results that have dropped recently. If you look at a lot of the listed microfinance companies, so you look at LASEF, you look at
ISP.
Access, they didn't really do, and if you, yeah, ISP.
Yeah.
If you look like if you do some of the comparisons, you look at the loan book, you look at the profitability and stuff like that, you really see how the difference. Like it seems as if like I think LASEF, their earnings were way down for the yeah, so for December 2022, that quarter ended then to this 2021. They made 30 million versus 130 million, and that's over that Christmas period, which is a pretty well. LASEF isn't just loans and stuff like that, but the Christmas period is supposed to actually be a pretty good quarter for them, and they actually had less revenues too. And then I think with Access, I'm trying to remember if I think they had less profit. No,
Mhm.
they technically had a little more. So
Mhm.
they did 92 mil versus 85 mil. But look at the size of that loan book, and then look at where like dollars the growth um dollars loan book has just grown so much since listing. Even at like, I remember even when you guys, so the stocks and the rocks with David Henriquez from Ultra, he gave a number for um their loan book at that date. So I think that was, when was it? December or January?
No, that was January.
End of January. Yeah.
January. So
End of
he said
January.
a value of that loan book, and then I
Mm-hmm.
looked back at an article that came out maybe October last year or November. And then in that article, they said what the loan book was at that time. And I just remembered even within the 1 month or whatever it was, that level of growth was just crazy. So it's actually funny to like that some people are calling the names, but they're like, oh, why would someone choose to buy dollar over Access? Access is the better buy. Access, they're claiming that Access will be a $250 stock in like the
Oh, I,
next.
I know who that person is.
And then, um, like I look at things like that, and then I look at it in terms of like the average investor. If I
Mhm.
was comparing two companies as me, just my retail investor self, this company here
Mhm.
just started out, they just listed, they have the tax break, they have a smaller loan book, but they're more profitable. They're look at the amount of announcements that come out. They're constantly putting out new loan packages. I swear it's almost every week or 2 weeks you hear a dollar dropping some new package. The most recent thing I've heard from Access was just the deal that they had with like Fosterich, how they're trying to kind of I guess compete with dollar. But then even something like that, look
which
at the
dollar has as well.
yeah. So that for people that don't know, a notice came out maybe was it 2 or 3 weeks ago? Well, first a notice came out from Fastwitch and Dollar saying that Fastwitch was going to be partnering with. Let me pull up the notice and read it out. Fastwitch was going to be partnering with Dollar, and then Dollar would basically offer loans to their customers to help them finance some of the different products Fastwitch offers. So in the
Mhm.
notice that came out, it said solar power systems, solar water heaters, and then Fastwitch, I mean, Dollar would be providing up to 90% of the financing. And then maybe a week or two after that, a notice came out from, I guess, Fastwitch and Access saying that Access was going to be offering that same, well, a similar package, but they would be willing to basically provide all of the financing. I remember looking at, think about the Dollar versus Access. Even if, for example, Access is trying to make their loan package more attractive, you realize that because Dollar has the tax break, that makes it very hard. Like Dollar can even they could possibly just reduce their interest rates and stuff like that or absorb that into their business because of the benefit of things like the tax break. And I
Yeah.
don't know, like it's just weird how I would like from the view of a retail investor or just the average investor. I still don't see how I would go pick Access over, like, for example, Dollar and stuff like that.
So you want to say who said that, or actually we'll ask the everyone that's listening. Leave it in the comments who you think actually said buy Access over Dollar, and Access is worth what 200 and
I
something
think it'd be at,
in the
I, sh-
next.
I should
We need
probably
to
try to find it. It
yeah.
said 200. I think it said $250,
Hmm.
and it gave like a timeline, so it might
Yeah,
have
I
been
remember.
5 years. Let me see if I can find it.
I remember.
I think
Oh,
that. Mhm. Yeah,
uh,
I think that, and as I said, clearly I'm biased because dollar is one of the companies that I
Hmm.
like. I think that the tax advantage that you mentioned is important, and dollar is in the early stages of the first 5 years, which means that they'll pay no taxes. When did dollar this again? Last year?
Last year
Yeah,
like
last year.
June or
Yeah,
July.
yeah,
hmm
last year, recently.
hasn't
So,
even been a
so
full year.
it
Crazy.
hasn't even been a year, so they have four plus years of no taxes.
Hmm.
No corporate income tax. So I mean, I'm looking forward to their continued growth. I do.
Hmm.
I
Yeah,
see they declared a dividend. They declared another dividend too.
there's an
Yeah,
interim
man,
dividend like 2 cents
I
after
see it. No,
just doing a 4 cents. Hey,
look
bossy.
here. I like them things. You know, even though I'm not a great dividend investor, if I can get something to, spend on a liquor dinner or something like that, then that's fine.
Mm-hmm.
You
Mm-hmm.
know,
Mm-hmm.
dividend so
Yeah.
nice, man.
Mm-hmm.
No, a liquor dinner can be $500. You know.
Very true. Very true. I love that.
Yeah. Oh
No,
boy.
yeah, and you're right because some people do care about the dividends, and I like that. It's very telling for a company that just lists and you pay a dividend and then you pay an interim dividend, and it's just barely been half a year that you've been listed. So it bodes well for me. It bodes well for other shareholders. It just looks nice, and I mean, of course, the top shareholders would love that. First Rock and Equity. I'm pretty sure they would love that as well. So yeah.
Hmm. Uh, any other questions, Dan?
Uh, no, I think it's Simon. I think we've taken up a lot of your time. Thank you so much. For being here, and I look forward to our next episode. I just have to put that out there. But I look forward to talking to you again for sure.
Yeah, man.
And whether it's here, whether it's at Stocks on the Rocks, whether I see you at Summit, anywhere. It's always good running into you, Simon. So thank you so much for taking
All right.
time out your busy schedule to join us on the Limitless podcast. So
All right, cool. Thanks, guys, and I really appreciate being here. It's a good vibe, and I mean, you guys know I can talk about investments for hours. We won't go on. But thanks a lot, guys. I really appreciate it.
yeah, man.
Anything you want to share with the viewers?
I mean, yeah. What I do is And I recommend all viewers to follow Stocks on the Rocks. Don't follow me, follow Stocks on the Rocks. Um, we're looking to push out more value-added information through our channels, and
Mm-hmm.
of course, expand on the pitch deck competition. We're expanding, the schools that we speak to about investments. We're going into the communities through our grassroots initiative. Overall, we are looking to impact Jamaica. And I just want to say something. I'll leave with one thing there, and Matthew, if possible. Um, growing up, I grew up thinking that one person can't change anything, and over time I realized that if we keep that mentality, then nothing will change. Through Stocks on the Rocks, what we've done is contributed to a movement that is impacting real people's lives, bringing, exposing this wonderful world of investing, as I call it, to the average Jamaican people that have never thought that they could do it, or be exposed to this. And it's just really just something that I want to express to people that if it's something that you're passionate about, um, start with expressing the influence that you have in your circle, and expand beyond your circle. You can impact lives and people.
That's actually crazy because one of the books, Dayan, that I've been reading, was it Seven Habits of like Highly Effective
Active
People?
people. Mm-hmm.
One of the
Mhm.
first, in like the first chapter, what they go through is there's like your circle of influence, and then there's your circle of concern, and then basically, um, by being proactive and actually focusing on the things that you can change, you can have a much better life. You'd find that you can reach, certain goals and stuff like that, and it's just a better way to live, focusing on what
Mhm.
you can actually control instead of focusing on all the things that you can't control. Oh, and I should
Absolutely.
also pick you guys up. I remembered one of the, I don't know if you remember, probably 2 years ago or so, you did I think it was through Stocks on the Rocks. You did a YouTube, what was it? Maybe it was Twitter Spaces or YouTube something, where I think it was YouTube. You were going through how people can come up with price targets and stuff like that for a stock. Like, how does someone say this stock is at $5? I think it could be a $10 stock. How do you value it? I don't remember if you remember the title of that video.
It's like a valuation thing or something.
Yeah, and then I remember I think you did it with Julian too. And I remember that I
Mhm.
thought that was really good because that was basically a free investment class, and I remember learning things that even to this day I kind of apply. Something you brought into was doing. You spoke about how when you go read on like a report, you always basically put it into the Excel sheet, and then doing that process, you will then pick out certain outliers or stuff because you're actually entering the data. Most of say like in one column, most of the time you're
Oh,
entering
yeah,
20
yeah.
million, and then you're suddenly entering 40 million. That can help you to then look at that.
Yeah, yeah,
Uh,
yeah.
I thought that was really good that you guys did that. If I
Yeah,
can
that's
find the video,
something that I do in my job even now. So we did a video on, so it's two, I think. We did a video on valuation, which was through Zoom, and then we uploaded it. That was a few hours, and we did an overall video on financial statement analysis, how to read different types of financial statements, based on financial company, manufacturing company. So yeah, man, we're actually looking to do more of that this year, just to expand the team and do more of that. So you should be seeing more of that.
Lovely,
awesome.
lovely. All right, guys. Well, if you like the content, guys, make sure to subscribe. Sorry, like the videos if you really like it. So that's it. Thank you, Simon, again for
All
coming
right,
out.
all right. Take care, guys.
All right.
Mhm.
Have a good night.